Hey everybody, Courtney Smith here with our March 28th edition of Wall Street Winners. And here's our March 28th edition of our disclaimer. It's pretty much the same as last week. Okay, so we continue the rally here. And Thursday, Friday were both very powerful days. We broke above the previous highs. I'm looking here at the S&P. And I think we're going to continue to move higher. But I don't believe we're going to break to new highs. I think we're going to challenge up here, but not break them. Notice, well, that's not what I want. The purple predictor is weak, and that tells me that we can see that the smart money is starting to sell the money that they've made on this rally. So maybe we get up to these old highs, and that's about it. So bullish, but we have problems. Let's take a look. We'll keep going, and then I'll give you my final conclusion and scenario of what's going to happen. Here we've got buying pressure above selling pressure for 2 weeks in a row. First time that's happened since over here, near the beginning of the year. But the point anyway is that the market's largely in balance right now. It's very, very close between buying and selling pressure. The NASDAQ also same thing, but notice the purple predictor is a little bit more bullish, but basically the same pattern as the S&P. Now, here's what I want to get into. So our seasonality indicator is not going to turn bullish. I don't think we'll see the IWM break these highs at all. But come on, I don't know why that's happening, but here we go. All right. But the utilities have broken out. Now, the utility seasonals start May 1st, which means that I start looking April 1st. Well, here we are a couple of days before April 1st. So I think the seasonality is kicking in very early on the utilities. So this is quite bullish, and we should be getting long utilities like crazy because utilities rally during the exact same time that the industrials don't move at all. They go sideways and vice versa. So I think we have to concentrate more and more on the utilities going forward. Now, here we see the seasonality, and we look at the purple and the red. They're both a little bit more rally, and then we're going to have a 2-week decline in the marketplace. So I think that makes perfect sense. I think this is the correct scenario that we're going to see. So we'll rally Monday, Tuesday-ish, something like that. And then we'll drop for 2 weeks. And then we'll have a bigger rally into the late April highs. So this is really what we're looking for. Now, remember, we're here towards the end of March. So there's only, I shouldn't say a couple of bullish days, a couple of bearish days. And then we're going to see the rally up here. Now, at that point, we have to look at, once again, we look at the red or the purple. And you can see that the red line then moves sharply lower. So we'll stay bullish here until towards the end of April. You can see here the purple line also goes down, not as much. In fact, the red and the purple are the same line, except that the purple doesn't go down as much. The red is more bearish. And so we have to use the red line because the market's actually gone down far more than either the purple or the red. So we have to take the more bearish problem, the more bearish scenario, and that's the red line. So we should look for a pretty big midsummer or early summer dip here. But first we have almost a full month of rally here. Let's call it 3 weeks of rally before we get there. So that makes perfect sense to me. We're going to have up and down moves all through the summer. Oh, let me go back, but let me tell you something. I still think we're going to have then this big dip right in here. That's, I think, might be bigger than this one. This one might be less than what it looks like here. This one might be more. All right, another thing, asset allocation. They are bailing out of bonds. They don't want to be anywhere near the bond market, and so they're taking that money and putting it into stocks. That's why stocks are going up. You see, people get confused. And they say, how could stocks be going up? We have high inflation. We've got a war in the Ukraine. We've got a senile president. Oh, Did I say that out loud? Sorry. Okay, but you see what I'm saying. In other words, there's all these bearish factors. Why'd the market go up? Because one of the things that here on Wall Street Winners that we do is we look at the internal dynamics of the marketplace, which is where's the cash coming from? Well, there's a flood of cash coming from the bond market, and apparently they don't care about the Ukraine or inflation. They just want to get out of bonds. Actually, well, they do care about inflation, which is why they want to get out of bonds and into something better, such as, and now let's go to our next slide, they want to go to something that's low risk like utilities. Do you see how all this fits together? I've selected the indicators that tell you the internal dynamics. Nobody uses this group of indicators in the world. I've been using them for 35 years. Global shares are boring. All right, this is not boring. This is the yield curve. It's getting more and more positive, but there's a big but there. Take a look. Here's the yield curve right here. It's getting more positive versus the 3-month treasuries. You can see we were at 0, and the Fed's raised interest rates 25 basis points. But the long end of the yield curve has gone up even more. So if we compare the 90-day T-bill to the 10-year T-note, the yield curve is getting more and more and more positive. If we compare the 2-year notes to the 10-year, that's called 2s, 10s, it's flat. And that would be a sign of, I mean, I'd like to see it a little bit flatter, but, you know, we could see a recession because of that. Now, here's the thing. I focus on 90 days versus 10 years instead of 2s, 10s, and I'll tell you why. I look at both. 2s, 10s has predicted 14 of the last 18 recessions, which is pretty darn good. And I'm telling you, this is flat enough that I would probably say that's a recessionary signal, or I would say it's a zero economic growth, okay? But the 90-day versus 10-year has 18 out of the last 18. It's more accurate. So we, as analysts, have to combine the two. So I've been telling you for months now that the economy is going to be slower than people expect. And a lot of that is because of the flatness of the 2s, 10s. Not a recessionary signal, although I'm working on a video to tell you when the next recession is going to be. 2s, 10s says we're going to have a flat economy, but the 90-day versus 10 years says, no, things are doing great. Okay, bonds, here you can see they're dying here. The purple predictor had perked up, but now it's starting to bail out as well. Bond key factor screaming higher. I mean, this is one of the most, well, you can see this chart goes back to 2019, and this is the steepest up move we've seen. So there's a lot of pressure on interest rates to move higher. Now the dollar is forming a little pennant formation here. Pennant formations are usually broken out in the direction of the previous trend. The previous trend was up, so this should move higher on a breakout. So get bullish on the dollar. Now, let's take a look here. This is interesting as well. Notice this formation. Strong up move, speculative blow off, comes down, moves sluggishly higher. Now I'm going to go to my next chart. Crude oil, same chart. Speculative blow off, comes down hard, now starting to move higher. All right, now let's go back to precious metals. Now let's go back to gold. Once again, I think what's going to happen here is we're going to continue to rally. And we're going to rally up into this zone right here. And once we get there, we need to take profits because it's going to be hard to break above that high. Let's go over here. We're starting to see, once again, we got sideways, up a little bit, plunging. So the gold key indicators are still a bit negative. Let's take a look at oil. I think oil is going to do the same thing. It's going to move back up over here. That's a move of about $17 a barrel. That's a pretty big move. except when you look at the last month, okay? But up until the last month, $17 would be a big move. So I think we're going to continue to go up here. And then we have to start looking at volume to see whether or not we have a failure top or a double top, something like that. And so we'll probably take profits up here on our long energy positions, okay? So that's what's happening here. But look, we have, I'm going to argue against what I just said for a second. So, I mean, you know, I live and breathe the oil market. I'm currently in Dubai, which is one of the United Arab Emirates. And one of the things is that people in the trade are starting to talk about $150 oil, $200 oil. Now, the fundamentals right now are not supportive of $150 or $200 oil. It's not there. But when you start to push them, they say, yeah. No. It's not there now. But then they talk about their fears. And the fears are these, that there is a disruption of supply. And that disruption of supply could come from Russia. It could come from Houthi rebels bombing Saudi or UAE oil fields. It could come from a revolution in Iran. It could come from a revolution in Venezuela. You see what I'm saying? There's a number of flashpoints, and the betting of the trade is that they don't know which one's going to occur, but one of them will occur. One of them will occur because there's too many possibilities. And when you have many possibilities, even though any one of those has a small possibility, when you total them all up, they end up being a probability. And that disruption of supply would cause a quick spike up to 150 to 200. Some people are even saying 250. So we got to remain long when we get up to this high area, but we need to be nervous at that point. Okay, Bitcoin, I got to be bullish here. Here's the 55-day high. Purple predictor is bullish. I'm going to buy Bitcoin on a break of these highs right here. So I'm getting back on the bull side here, but I'm going to wait for the breakout here before I get there. Okay, freebies, love having you here. But you know what? Do you want me to tell you where I get a lot of these trades? It's from stockbutler.com. And go there now. I helped put this together. This is one of my students put this together. But this is one of my best research tools that I've got. I am an affiliate. But I'm telling you, I use it every single day because it makes my trading, it saves me a ton of time for a modest cost. And this is where I get my best of the best stocks, is from stockbutler.com. So check it out.